Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. I want to talk to first-time home buyers about what type of a mortgage that they ought to do. Now, this is going to be pretty simplified and we're going to go into a few factors, but we're going to sit down, and we're really going to counsel you and talk to you about the 3.5% down payment of an FHA insured mortgage and a 5% conventional loan that is through Fannie Mae or Freddie Mac. And these are the two ways that normally we go about it. Well, let's talk about the advantages and disadvantages. First of all, in the case of FHA versus conventional, your credit score can be lower. So in other words, if you're about a 640 credit score, typically, you can get what we call the absolute best interest rate on an FHA. It's a little bit more forgiving in that respect. You need a higher credit rating to go with conventional. But if you have one, if you're saying at least a 720 on your credit score, then you have a choice of either one. But the advantage of FHA is a lower credit score. Now, the second thing is the down payment itself. In the case of FHA, it's 3.5%. That's the lowest down payment you're going to get. Now, if you're a veteran, you can go with a zero down VA loan, but in this case, we're contrasting the FHA and the conventional that you're not a veteran who can do a VA. And so 5%, it's not a tremendous amount of money, but it's a little bit more of a down payment. So if you're really in a crunch on your money and you need some reserves, obviously FHA has an advantage of 3.5%. But now the advantage is going to shift back to conventional, and here's why. One of the changes recently that FHA made is you're paying mortgage insurance into an insurance fund that FHA has to guard against certain FHA loans that go into foreclosure and where they have to pay the lender because they've insured the loan to the lender. And so in that particular case, if you own the house for 20 years or any portion of that 30-year term, that mortgage insurance never goes away. And so you're not really getting the advantage of paying into interest, which you can deduct, or principal, which is going to build equity for you by owing less money. What it's going into is an insurance fund every month. But let's take the 5% conventional. Here's the advantage here. If, for instance, we find you a home that we get at 5% undervalue, and you put a 5% down payment, well, let's say it's a $100,000 home, well, that's a $90,000 equity to type stake. So in other words, $10,000. All right, the thing that's really great about a Fannie Mae loan or Freddie Mac loan is once you get to a 20% equity stake, what we call an 8% loan to value, then what you can do is petition petition conventional loan holders to remove the mortgage insurance. And so you're not that far away. Instead of 20 years of paying in mortgage insurance for the insurance premium for FHA, maybe it's 5 years, maybe it's less with appreciation, with deductions that you make to the principal. And so 5 years down the road, all of a sudden $80, $90 a month, whatever it happens to be, is gone away. And so you have something that you don't have the advantage of that is gone away. So that's the advantage of the conventional mortgage. Now, the fourth thing is kind of psychological. And this, again, is an advantage, I think, with a 5% conventional loan, which is when we are buyers and we give an offer to a seller. Personally, I don't think there's that much difference between 3.5 and 5%. I don't think FHA has any kind of requirements now anymore that are just crazy. It's not that much difference. There are some differences, but very often the seller looks at a conventional loan and likes it better. Somehow they psychologically think it's a better loan to take. Now, part of that, of course, is higher credit ratings. So that's the factors that we're all going to put together. It doesn't mean that, one is absolutely better than the other. We're going to look at what your needs are, and we're going to evaluate that. We're going to give you the pluses and minuses, and hopefully what we're going to do is do the best for you. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.